Hello everyone, thanks for joining us this Saturday morning and welcome to this educational presentation of the power of the buy-sell line in action. Now, it's been often stated that, trading is very difficult. Trading is very complicated and it's one of the most difficult things in the world to succeed in. And I think that is true, but because of the main reason being that we overcomplicate things. We've always been taught that in order to be successful, usually in anything, the more complicated, the more rules, the more restrictions, and the more guidelines you have, the more valid your plan will be in any business, in anything. Think of training for an athlete. Think of starting a new business. But in trading, it is actually the opposite. It's the simpler your plan, the more validity it has. In other words, you will have a higher level of consistency if you keep things as simple as possible. It's the exact opposite of the way we've been taught to be involved in usually every other endeavor in life. And I'm going to show you that today, how simple it is to be a consistent trader. So you can get all these things about having these complex systems and having all this difficulty in these indicators that you have no idea what they're based off of. I'm going to show you how simple it is and how easy it is to actually be a consistent trader. But I'd like to start off by sharing with you some statistics that go along with what I've been saying. And this is kind of a little way to wake you up early on a Saturday morning, because the facts are that 80% of all traders will lose money. Now, when I say lose money, I do not mean that you'll go into a slump or a drawdown. This literally means that you will lose everything you've set aside for trading. Now, either you'll stop trading entirely, what a lot of traders do, they try it, they dabble in it for a bit, they lose most of their money or all of it, and then they stop, or else some wait to save some more and then they jump back in. But ultimately, 80% of all traders will lose money. Now, the facts are also that 15% of all traders will just break even. Now, that's only a small portion of all the traders will be breaking even, and that's actually pretty good because there's a lot of volatility, a lot of ups and downs in the market, and you're basically not losing anything. You're just giving yourself an education, but you're spending a lot of hard-earned time and effort and money just to break even, just to tread water. So ultimately, the facts say that only 5% of all traders will be consistently profitable. So if we have 100 people, we have roughly about 100 people listening to this presentation today. Out of all the people listening in the room today, only 5 of you will be consistently profitable, okay? Not very good numbers. Now, if you want to see what this looks like on a pie chart, this large pie here, the large portion in red represents the amount of traders that will ultimately fail. That portion in blue represents the traders that will break even, and that small green sliver represents the percentage of traders that will consistently make profits. Now, I'm not trying to scare you. I'm not trying to dissuade you from trading. I wouldn't want to do that. But I'm just trying to share with you the facts, the way most traders trade and the outcome of most traders. But we have to ask ourselves, how is it possible that the majority of all trading profits are captured by such a small percentage of traders, that small green little sliver of 5%? Now, I've been trading long enough to have my own opinions and my own ideas of what I think the markets offer us. And most people think and look at the markets as simply a zero-sum gain. In other words, when I win, someone loses. When I lose, someone wins. And that's the way they look at it. They look at it as if it's a battle. They look at it as if I've got to take what's mine and take it away from you. Or the market is actually something that they're competing with. All right? They look at the market as a competition factor. I don't look at the market that way. I was trained to do that in the beginning, and I started out doing it that way. But actually, over time, I've seen that the market is actually your best friend. The market is like this huge, vast ocean of unending profits, of unending possibilities, and it's up to you to take as much as you want. It's a never-ending source of profits, of being consistent. It's just us that get in our own way. So there's no, I've often said this before in my presentation, there's no zero-sum gain that you have to have a mindset of. Now, that would be comparable to saying, well, every breath I take in, someone is exhaling, or every time someone exhales, I'm inhaling. So there's one less breath to go around. That's silly. There's enough oxygen to go around for everyone. The same way there are enough profits to go around for everyone. So if this is true, this is what I believe, then why is it that only a small percentage of traders are able to capture that? Well, it really isn't that difficult. In fact, it's rather simple. The reason is that these traders that are consistently profitable are on the right side of the market. You see, most traders do the opposite. They should be selling when they're buying, and they are buying when they should be selling. And the whole industry is based on this, meaning that you're always taught to buy low, sell high. But when you're buying low, usually they go lower, right? You've all seen that. And when you sell, they usually go higher. So this promises to be a great presentation today because I'm going to share with you how you can start using this simple tool, the buy-sell line, to get you on the right side of the market. And it's extremely simple, but you'll see how powerful it is. So welcome. Once again, my name is Steven Primo. I'm the president and founder of Specialist Trading. 8 years ago, I teamed up with my sister site, ProTrader Strategies, where our goal and our purpose is simply to educate you. We are different from other websites in that we don't promise to have the system that will generate thousands and thousands of percentage points a month. We don't promise to have the perfect indicator that never foils you, that is always telling you when to buy or sell. In fact, we don't believe in those things. Those are recipes for a disaster. All we do is supply our members around the world in over 110 countries and in virtually every state in the United States sound fundamental education. The reason is I've been trading for over 40 years now, 41 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist. A specialist is just someone who made markets at about 50 stocks. So I've been trading in just about every market environment. I've traded just about every system, every technique. So I know what works in terms of consistency and I know what doesn't work. So what students around the world need is someone to educate them on the things that work, that show high levels of consistency. Because some system that costs you $10,000 may do well for a couple of months, even a couple of years. But usually, it's been my experience, they give it all back. All right. And that's not a sound trading method. All right. It doesn't matter if you make $1 million 1 year and then give it all back the next. That's silly. That's just gambling. What you want as a trader is something that will sustain you, something that will have consistency so that you'll be able to be trading not just 1 or 2 good years, but 10, 20, 30, 40 years down the road. So this is our goal. This is what we do at Specialist Trading ProTrader Strategies. We provide you with education so that you can be in charge of your own trading. Now today promises to be a great presentation because I'm going to share with you this technique where you can start using it as early as Monday if you like. But before we begin, as always, we are required by law to first show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of examples. Older examples that are maybe 3 or 4 months old to examples that happened just yesterday, Friday. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view our disclaimer before we begin this presentation. And while you're taking a brief look at our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. Every day I post different information, different things from little bits of wisdom I've accumulated along the way to actual signals that our strategies have generated. So we share those for educational purposes with you. So copy down our handle right there, abbreviation for Specialist Trading, and feel free to follow us on Twitter. Now remember, once again, the way we differ from other presentations, from other webinars, is that we are strictly about educating you. All right, it's our belief that the reason why most traders fail is because they're not educated properly. And when you're not educated, what do? You rely on someone or something else to tell you how to trade, okay? If you don't know how to do something, you ask someone to do it for you. Ultimately, this is a recipe for disaster. Our entire industry is built on this, on you going to a chat room and seeing what everyone else is doing, or going to a trading room and following some moderator who tells you what to do, or by subscribing and paying for a signal service to give you nightly signals to tell you what to buy and sell the next day, or by watching TV and finding out what the pundits think, or even by listening to news and finding out if it's good news or bad news before you can make a decision. Everything is based on what someone or something else is going to tell you what to do. And that couldn't be further from the truth. Your own decisions should come from you, and they should come from the market you're trading in front of you, not from an outside source. All right, not from the institutions, not from volume, not from some chat room. They should come from you. So this is what we do. We provide you with the education so that ultimately you can decide. This is the same way I was taught some 41 years ago when I was struggling myself. And ultimately, I think these things are what has been able to sustain me for over 4 decades now, to be able to trade that long. Hopefully, they'll be able to do the same thing to you. So we are strictly about educating you. And since this is going to be conducted like a classroom, we will be taking questions. But another way in which we differ from other webinars is that we wait till the end to answer any questions. So if you do have any questions, please wait roughly about another 30 minutes from now at the longest, and then I'll reserve the last 10, 15 minutes to answer any questions that you may have, okay? So write them down or try to remember them. The only question I will answer right now is this being recorded? That's the most common question I get. Yes, it is. So if you have to leave early, or many times, a lot of you will have technical difficulties. You won't be able to hear or see the screen properly. If that happens, oftentimes just log off, go to webinar, and then log back on. But if you're still having technical issues, many times it's your internet connection. And so we will send you a link to this recording, okay? So once again, if you have any questions, we have a good crowd here today. If you happen to join us late, please remember to ask questions at the end. Write them down or remember them, and I promise I'll get to them at the very end of today's presentation. Okay, let's begin. We're going to start everything by sharing with you how easy it is to apply everything I'm going to be sharing with you on our new PTS Primo Charting Platform. This is a platform, an educational portal I developed with Pro Trader Strategies, and it's specifically designed to teach traders how to listen to the market. Remember I said your decisions, all of your decision-making process should come not from an outside source, but from the market itself. The trouble is most students don't know how to listen to the market. We've never been trained to do that. We've always been trained to listen to what the news is going to be, what the economic report is, what the jobless claims are, what that means. Or we've been trained to go to a chat room or to listen to some guys on TV, but we've never been trained to listen to the market, the chart in front of us. This is what the PTS Primo Charting Platform does, and I'll show you how simple it does that as well. Okay, so let me start by asking you a question. What if there were a tool that was automatically designed to put you on the right side of the market? Remember, one of the main reasons why most traders fail is because you're buying when you should be selling and selling when you should be buying. All right? How many times have you seen someone say, oh, this market is so overbought, you've got to sell it. It's gone up too high. There's no reason it should be this high. Or how many times have you heard, oh, this thing is so oversold, you've got to buy it. All the indicators say that it's never been this low before in terms of being oversold. It's where all the institutions are buying. You've got to buy it, right? Usually we're on the right side. We're buying when we should be selling and vice versa. But what if there were a tool that could do this and automatically put us on the right side? Well, the funny thing is there is, and it's called the buy-sell line, all right? I've often stated to my students around the world, and when I spoke in Las Vegas a few months ago, I talked about this specific tool that I said, if I were stranded on a desert island and could only use one tool to trade with, it would be this. Because this tool is so simple, it's kept me out of so much trouble and helped me be consistent, and at the same time, it's so powerful. And you have access to it right now. In fact, you don't have to purchase some $10,000 system in order to have it. You don't have to download some amazing indicator that will give to you. No, you have access to it. If you have a platform with charts, you can have a 50-period simple moving average plotted on your screen because that's all it is. But see, most people use this incorrectly. They use the 50-period moving average as a crossover system. They use it to define the trend, and those are all valid and okay, but they're generic. Here's the way we use it. In order to apply the buy-sell line properly, all you have to do is plot it on any chart. I don't care if it's a 5-minute chart, a monthly chart, a tick chart, it makes no difference. But before you get a signal, before you pull the trigger, you must ask yourself this question. Where is price in relation to the buy-sell line or the 50-period moving average, all right? In fact, that is so important. I would recommend that you copy that phrase down right now. Write it on a little Post-it and have it on your computer screen. Ask yourself that at all times. Where is price in relation to the buy-sell line? Because before you buy or sell, regardless of what strategy you're trading, I really don't care what strategy it is. It could be based on something that you've developed, based on something I've developed. It makes no difference. But you'll only come up with 2 scenarios. Because if price is above, you're only going to be a buyer. In other words, you'll only look for buy setups. And if price is below, you're only going to be a seller. You'll only look for sell setups. It's that simple. But this simplicity has kept me out of so much trouble in the last 40 years and helped me to be a consistent trader. Let me show you what I mean here. Here's a weekly chart of the spiders before we had the large sell-off this last month, okay? Someone looking at this would say, gosh, I wish I would have known we were going to go up that high or at least be in an uptrend because I had no idea. I thought we were going to head lower. Well, there is a tool that could have got you on the right side. It's the 50-period moving average. And going back all the way to March of 2016, a whole couple of years ago, you would have known that price was above. Remember, you always ask yourself, where is price in relation to that 50-period moving average, the buy-sell line? If price is above, you're only going to be a buyer. In other words, whatever method, whatever technique you're trading, you're only focused on buy setups. All right. Now, conversely, we look at this chart here on IBM. Someone looking at this would say, gosh, Steve, I lost so much money in this. The signal service I go to says that you had to keep buying this. I kept buying it all the way down, either with stock or with calls or options. And then when we finally got to this level, this $5,000 class I took said that this is where all the institutions are buying. Look at this major support here. It's all based off support and resistance. So this is where my support is. So I've got to purchase it right here, right? So you follow the course rules, and then look what happened. All right. So many people spend so much time, effort, and especially money to lose money, when in actuality, all you have to do is apply a 50-period moving average. See how simple this is? And you have access to do this right now, and then ask yourself, where is price in relation to that 50-period moving average? Obviously, price was below going back to March 2017, a full year ago. You would have known not to purchase IBM, and you would have saved all that money. Now, we see here in this example of CREE, all right, we have kind of a flat market going sideways. It goes down and then back up. Now, how could we have known what to do here? Well, you apply the 50-period moving average, and at the majority of this chart actually is below the 50-period. So remember, the 50-period moving average or the buy-sell line is not a system. It's not a trading strategy. Just because price is below does not mean that you're going to sell at the market. It means that you're going to be looking at the market from a seller's point of view. So whatever strategy you have, whatever technique, it should only be from a seller's point of view. But how do we define when we've crossed over to the upside? Because as we can see here, we're kind of oscillating right on it, a little above it, a little below. Well, here's the rule of thumb. Look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend has been established. So that's a rule of thumb. Remember, this is not written in stone, but just a way to help you to know what side of the fence you should be on. So now we look back at that chart again. We see the majority of the bars were below. We're looking at the market from a selling point of view. But now we start to oscillate, and what do we have here? 1, 2, 3, 4, 5 closes. So this is our clue. Remember I said everything comes from the market? Not some guy in a chat room, or not some guy on TV, or not the jobless claims, but the market. The chart you're looking at is telling you, I want to go higher because I have 5 closes above. The odds are I'm going to be going higher. So this is how simple trading is. When you learn how to listen to the market, you know that you should not be looking to sell. And if you had some strategy or some technique that was generating buy signals, you could have taken advantage of the nice upward move that happened. Now, did we know it was going to move up like this? No, we had no idea. But the market told us it wanted to go higher. So our job as a trader is not to figure out the earnings. Our job as a trader is not to go to a signal service and just blindly take orders without knowing what they're based off of. Our job as a trader is simple. It's twofold. First rule is learn how to listen to the market so it can tell you what it wants to do. In this case, it was telling us, it was screaming it wanted to go higher. Our second job is to jump on board, whatever it wants to do. Find a little structure, find a strategy, a technique that enables you to jump on board in the direction that the market wants to go. That's how simple trading is. It's not any more complicated than that. You don't have to make it more complicated. That's why traders wind up in that 80 percentile of group that loses money, because they overcomplicate, they base it on things that are telling you what to do rather than listening to the market. How about UA? Okay, someone looking at this will say, gosh, Steve, every time this thing bottomed out, I bought it. It went up for a little bit and then made lower lows. Bottomed out here. The service I have says we have a double bottom, so I bought it. It was doing pretty well for a week or two and then makes lower lows. It had one last final gasp here. I bought it again and now it makes lower lows. All right. Once again, this is the way most people trade. They're buying when they should be selling. And someone would say, well, how would I know that I should be selling? Well, you apply the 50-period moving average line. We've been below this entire time. So why would you be buying anything below the moving average? The market is telling you it wants to go lower. All right. Your first job as a trader is to listen to what the market is saying. It's telling you it wants to go lower. Your second job is to find some type of structure to jump on board, to go with it. So as we can see, price has been below. So we don't want to buy anything at all in this stock. How about MRK? All right. Well, here's where we talk about consistency, because remember I told you at the very beginning, nothing works 100% of the time. Sure, you're going to have some small losses every once in a while. We don't promise to have any system or technique that works 1,000% of the time. We don't believe in that. Everything will go into small losses. The beauty of our techniques is that they have high levels of consistency. In other words, many times when you go into a small loss, you'll be able to recoup it as quickly as possible. For example, here in Merck, in this example, we crossed above. We had a total of 1, 2, 3, 4, 5 closes above. So the market was telling us it wanted to go higher. And it went higher for a couple of weeks, but then it slipped back down. All right, so nothing much would have been gained out of this. Let's say your strategy got you long right here, and you were doing well for a week, and now you're losing money. All right, you're still holding on to the position. You haven't been stopped out yet. Or let's say you were stopped out with a small loss. At this point, you're probably saying, boy, this thing doesn't work. This thing Steve taught me about the buy-sell line, this doesn't have any consistency. Well, it's not really true, because if you continue to stay in the parade, just because you had a small amount of loss, you don't leave the parade, or you don't take your ball and go. You have to continue to believe in what you're doing. So following MRK, Merck, we see here that we are now oscillating above and below. So what is the market telling us? Not what are the earnings telling you, not what are the guys on TV saying, but what's the market telling you? The market is not only telling you, it's screaming that it wants to go lower, because it had a total of 9 closes below the 50-period moving average. So let's say you were still long from this position where you got here. This is an early warning coming from the market to sell, to get out, and if you're aggressive enough, to go short, because the stock fell 8 points in the next week. So if you were, had enough faith in this technique, you could have exited, taken your small loss, and got back on board looking to go short, and quickly could have made back that loss you had. All right, so I know a lot of you are saying, boy, this is great, but I'm sure he's cherry-picked these, he's picking the best examples, and, I need to have more proof on this, something with a little bit more validity, something that was a little bit more important than just what happened a couple of months ago in some of these stocks. Okay, I'm glad you're asking. That's good. So how important is the buy-sell line? Well, let's look at this example here of the Dow Jones. This is all on our PTS Primo Charting Platform, and this is a daily chart of the Dow Jones Industrial Average, okay? Here's the only difference. This chart is of October 1987, all right? Y'all remember what happened in 1987? How could the buy-sell line have helped us in that? Well, I was on the trading floor during this period of 1987, and up until then, we were swimming nicely above the 50-period moving average until we got to September, where we started oscillating below and above, and so forth. As you can see here, we had 3 closes below, then we kind of had 3 closes above, then followed by about 7 or 8 or 9 closes below, followed by a couple more, and then maybe 3 more closes above, then followed by 3 more closes below. So if anything is happening right now, it's the market telling us that there's a lot of uncertainty. Sure, every time it goes back up, it follows right back down, and it's closing more on the downside below the 50 than it is closing above. So if you weren't a full-fledged bear at that point, at least you were a little cautious and said, well, you know what, in my IRA or my long-term investing, maybe I want to sell half of my positions. Or at the very least, maybe I'll move my stops up. And that would have been a very good idea, because later on, the crash happened, the crash from 1987, and that was followed by a one-day market drop that would have been comparable to 4,000 points in one day to the downside. So this simple but powerful tool, a 50-period moving average that you all have access to, could have kept you out of trouble during the crash of 1987. I know a lot of you are saying, yeah, okay, that's great, but Steve, I wasn't around in 87. I didn't trade then. I didn't start trading till the early 2000s. Okay, let's look at another chart here. This is a weekly chart of the spiders. We've applied the 50-period moving average. The only thing different this is January 2008. Okay, all right. So roughly about 10 years ago, we're above the 50-period moving average. We start doing the same thing. We start having closes below the 50-period moving average, 3 closes below, 3 closes above, followed by some more closes below. Once again, on a weekly time frame, what is the market, the spiders, which represents the S&P 500 index, what's that telling us? It's telling us that there's some uncertainty in the market, in the 500 stocks that make up the index. as represented by this ETF. Now, this is a weekly longer term. So if you were an investor, you could have looked at this and said, you know what? Maybe I'll sell my portfolio or sell a portion of it or move my stops up. And that would have been a great idea once again, because this was the beginning of the 2008 financial crisis. We all remember what happened then. Now, you didn't have to, spend thousands of dollars on some signal service to help you with this. You didn't have to, lose all of your money in your IRA. You could have been out of the market. And then at this point, when we were, consistently below the 50-period moving average, you could have exited everything and bypassed the next year or two to the downside. Now, I want to give you a homework assignment. Go back and research your last 10 to 20 trades. I don't care if you day trade the E-mini futures. I don't care if you have weekly charts of stocks. I don't care if you trade Bitcoin. It makes no difference. Go back and look at your last 10, 20 trades. I can almost guarantee your losses were due to the fact that you were out of sync with the buy-sell line, okay? All you have to do is plot a 50-period simple moving average. That's all you have to do. And ask yourself, where is price in relation to that? If price is below, you will only look at the market from a seller's point of view. Now remember, that does not mean you're going to sell at the market. That means you will look at the market for sells in any strategy, any technique you're thinking of. If price is above, you should only be buying. You will never sell anything. I know every once in a while you'll get some great, tips or recommendations, or, oh, we sold here, we have a signal in, and look how it dropped, or we bought here at the very bottom, look how it went up. Sure, that's going to happen. Don't worry, that's going to happen every once in a while, like someone making a three-point shot, from the other end of the court. You'll see that happen every once in a while. It doesn't happen all the time, though. So that's the point. You want to be a consistent trader. We're not looking for those wacky trades where you caught the top or the bottom. That's once again a gambling mentality where you're looking for the long shot. And long shots won't sustain you. What you're looking for is something that's consistent so that you'll be able to be trading 10, 20, 30, 40 years down the road. And this is what the buy-sell line can do for you. Now, I want to introduce you a great feature we have that we just presented on our PTS Primo Charting Platform, which is called the Fluid feature. Now, we have different categories for the 50-period simple moving average, but the beauty of the Fluid feature buy-sell line is that it not only tells you the overall direction, in other words, what side of the market you should be on, but it tells you the strength of the momentum as well. So you're getting two advantages out of this. Let me show you what I mean here. Here is a chart in GE, okay? Obviously, you've been going lower. On our platform, all you have to do is click on the buy-sell line here in the upper left-hand corner of our strategy tab, and a drop-down menu appears. You can click on 50-period moving average, these different variables. Let's click on the Fluid, which is our new feature, and what is my favorite, because it will automatically show the buy-sell line, but color the back of the screen as well. So here's how we use this. When you see the different colors, the red-orange color means red sky at morning, traders take warning, that old sailor's adage. Well, we've changed it for traders, meaning that if price is in the red to orange zone, you don't want to be a buyer, take warning. And conversely, blue sky at night, traders delight. That's where you want to be a buyer. This is just the same thing we shared with you earlier about applying the buy-sell line, but now we've added colors to the back of the screen so that it makes it easier. So you don't have to decide or bypass it. So many traders will apply the 50-period moving average and then they'll forget about it. This way you can't forget about it. It's right there in front of your face. And then also we have the slope of the buy-sell line. The steeper the slope, the more high probability setups you'll have. So in other words, whatever method you're trading, you will have higher probability, more consistency. Why? Because there's movement behind it. There's momentum in that direction. Take the analogy of the one I always use of a river, all right? If you want to go from point A to point B, and you're on a small little boat or inner tube, and there's the river in front of you, all right, do you want to get onto that river if there's actually no movement? What if the river is like a pond? It's just not going anywhere at all. How are you going to get from point A to point B? You may have to paddle, you may have to take a long time, but it's not going to be a very nice, adventurous trip. What if that river had a nice, strong current to it? Well, you'd get to where you want to go very quickly, right? That's what we mean by the slope, the strength of the slope. When you see that strong downward slope, it's not 100% guarantee, but it's giving you a high probability that the strength is really moving to the downside. And so any sell strategy, whether it's one of mine, one of yours, someone else's, would have a higher probability for consistency. Now, conversely, if you have this, all right, here's a HPQ, an older chart in HPQ. We apply the fluid buy sell line feature, and we see that for the majority of the time, we've been in the blue zone, which is the trader's delight, because that's when prices go up, all right? So if you have this strong upward slope right here, that's where you want to take advantage of any buy setup. Any strategy, I don't care whose it is. It could be something you've made up. It could be based off the full moon. I don't care. You'll have a higher probability for consistency if you only trade with those strong upward or downward slopes. Let's look at this weekly chart of the spiders once again. How could the fluid have helped us? Well, we click on buy sell line, we click on fluid, and as we can see, all of a sudden it changes. Now, we had a nice upward, nice flow movement in the buy sell line, and now it starts to round off. As you can see here at this point, and this was in the weekly chart of the spiders in 2007, we started to flatten off. In fact, we're starting to go down just a little bit. Now, we had that coupled with price now being below the 50-period moving average. We're now in the red zone. Remember, red sky at morning, trader take warning. So we're not telling you to buy, to sell everything and go short and to buy puts. No, we're just telling you take warning here, because this is the market telling you that the slope is starting to turn and roll over, and we're having consecutive closes now below. So this is an early warning coming not from me. It's not from when I sit at home and say, well, you know what, I've got this opinion that we're going to have a sell-off, so let me warn all my students. No, it doesn't come from me. I'm doing the same thing you're doing. I'm listening to the market. It's coming right from the chart in front of you. So right here was a very early warning signal, and we all know what happened. That was the beginning of a 2-year bear market. You think this could have helped you. Now, once that bear market kicked in, look at the slope of the 50-period moving average. Look at the slope of the buy-sell line. Any sell method you wanted to apply would have really, helped you a lot, as you can see here, because look at how strong the downward movement was. Now, a lot of people say, what about news, Steve? Does this mean that you're going to always be on the right side in news? No, it does not. There's nothing is guaranteed in trading. If you come thinking that you're going to always win with some technique or some indicator, that's silly. Nothing is guaranteed. We're just trying to put the odds in our favor, and that's what the fluid buy-sell line does. For example, going back a few months ago in November, the end of November, Buffalo Wild Wings soared 25% over takeover talk. Okay, there was takeover talk that was going to be acquired by the Rourke Capital. So a lot of people were saying, oh, this is amazing. The stock should be going higher. And as we can see here, here's when the news came out. All right. Now, most people, once again, always look at trading as like they're victims. Oh, I'm a day late, a dollar short. I wish I would have known about this. How come I never can get involved in any big buyouts before the news comes out? You know, the chat room I go to, nobody talked about this, or the trading room, or the guys I watch on TV, no one talks about this, or the signal service I had, they didn't tell me to buy this stock. So, gosh, I always miss these. The ones I buy go straight down, all right? Once again, this is the way traders love to play the victim. But when you're given and supplied with the proper tools that teach you how to listen to the market, you never have to play that victim role again. Because if you had had our PTS charting platform here, you would have applied the fluid buy-sell line. You would have seen that this stock should not have been bought at all. Look at the strength of the fluid line coming all the way down until this point right here. Look what we have. 1, 2, 3, 4, 5, 6 bars closing above. What is the stock telling you? Not me, not some economist. What is the stock telling you? It's telling you, you know what? I might want to go higher. So if you're thinking about buying, this is an early clue here. And then we saw what happened in the stock. So the stock was telling you it wanted to go higher. There was no one you had to listen to. Now, I want you to take one more look at our disclaimer, because I'm going to do something. I'm going to break a precedent here that I usually don't do, but I'm going to do this just to show you that we haven't been cherry picking setups that happened 2-3 months ago. I'm going to show you what has happened currently using our platform. I don't usually do this, so bear with me here because I have to change slides and I have to change what we're looking at. I'm going to actually go to our platform right here. This is our platform. Once you become a member of our PTS Primo Charting Platform, you'll log on, you'll see this interface right here, and this is how simple trading is. All you want to do is click on a new chart, As you can see, we have BWLD here. Let's look at Apple. Let's see what Apple is doing, okay? And you punch up the chart, and automatically you'll be presented with the chart that comes up. Here's the current chart. Let's apply the buy-sell line. Let me show you how simple this is. You click on buy-sell line. Here's the drop-down menu, the different features. We click on fluid, and there it is, okay? Let me just make enough room here. Now, what has the market been telling us in Apple in the last 5 days? It's closed above, right? So what is the market telling you? It's telling you in this stock, it wants to go higher. Now, is this going to be guaranteed that it goes up 50, 100 points? No, we don't predict how high something will go. In fact, it may just go up one day and then come right back down. But the point is, right here, when we had 3 closes below, this was at the end of January, what was the market telling us? It was telling us when roughly it was trading at 170, 168, that it wanted to go lower. And from 168 down to 150, you could have saved yourself 18 points if you were long Apple. So if you're a conservative trader, you would have said, well, I'm going to wait to get back in, and then you could get back in again. But some would say, well, Steve, now I'm getting back in higher. Yes, but the reason is we would have been conservative and exited is that most people can't stand losing and taking that loss. Fear comes in. Do you remember what the fear factor was roughly about 2 to 3 weeks ago when the market was falling out of bed? The market was down over 1,100 points in one day. Do you think you would have felt comfortable or you could have slept well at night knowing that you had a nice long position in Apple? Most people will be selling at that very point that that comes out. All the news reports, everything that was happening, the fear that was going on in the markets, most people were selling. That's why the stock dropped so much. And most likely, because most traders trade alike, that's where you would have been selling as well. So if you get yourself out, and then you get yourself back in, that is 100 times better than getting yourself out down here, and then when it's time to get back in, not taking action because you're still frightened of the market. So this is what we're trying to do. We're trying to instill consistency in you. This is what professional traders do. They don't care if they're getting in higher than where they exited. It doesn't matter because if they go higher, they'll make that back and they'll be right on board. The point is you don't want to be a frightened, scared trader who is trading like a leaf at the mercy of the wind. You don't want to be trading reactively. You want to be listening to the market and do whatever it does. So as we can see here, going all the way back to November, it told us that it wanted to go higher back here, and it continued to do so until this point. Now, I want to take a few stocks that have been in the most active that I took off this morning from Yahoo Finance, okay? These are stocks that were in the most active sectors just from this past week, just to show you how the buy-sell line could have helped you. Let's look at Bank of America, BAC, okay? What is the buy-sell line telling us? Well, according to this chart, we have been above the buy-sell line, the fluid buy-sell line this entire time. So is there any reason why you should have sold Bank of America? Absolutely not. Okay, even during the big scare at the beginning of February, we never had consecutive closes below the fluid buy-sell line. In fact, we only had one close below. So there was no reason to sell. Had you gotten scared the way most traders do and basically bailed out roughly around here, you would have missed that. There's nothing wrong with this stock. Okay, so that's Bank of America. Let's look at another one. Let's see here. Let's look at FNGN. Okay, now this one's a little bit more tricky, but as we can see here, we were above, oscillating above the 50-period moving average, below. But look what happened here in these last few days here. 1, 2, 3, 4, 5 days above, and then look at the tremendous move that happened, okay? This is where most traders would say, well, boy, Steve, I never get good setups like this. How would I have known that this stock was going to take off? Well, you would have known because you had a total of 5 closes above that buy-sell line. Now, one of the things we offer for all of our members in the PTS Primo charts is an entry technique called steps. Now, we call this steps number 1. All you'd have to do is apply signal arrows to tell you when high probability entries are. And you think you could have gotten into this a couple of days before the nice run up? So see, the market does tell you what it wants to do. And according to our proprietary entry steps, that would have given you a buy setup 2 days before, okay? That's how simple this is. Let's look at another chart here. Let's look at MOMO, all right? These are all on, if you see the current Yahoo Finance buy list. and most active list. Once again, we were currently below the buy-sell line, then we started to get consecutive closes above, and now we went up, went back down during that February sell-off, but did we ever close consecutively below the buy-sell line? No. So this was telling you, if you were long this stock, not to sell. In fact, it was actually giving you some nice buy signs, because look what happened. Now here's another offer we have here on our PTS charting platform, one of our best pullback strategies, which is called strategy number 1. Once again, let me show you the ease of this. We teach you all the courses, what everything is based on, but in order to check your work, I would know just off of trading strategy number 1 that a buy signal was generated around here. Once you take the course, you would know just from the rules and learning to look for the patterns where a buy signal was generated. Then you would click on strategy number 1, click on signal arrows, and see that we have been generating a bunch of buy signals all right here. So do you think you could have taken advantage of this real nice run up in MOMO? Okay. Once again, all this is provided for you on our platform. Let's look at another issue here. Let's look at BUFF on the Yahoo Finance, most actives and biggest gainers. Now here in November of last year, we had consecutive closes below. So this does not mean you would sell at the market. What it means is that you would start to look for sell setups. Now, had there been no sell setups, well, a week or two later, you're back on the buying mode. And that would have been the best thing to do, because look what's happened. Even with the strong February sell-off, we only had 1 close below and then back up. 2 closes below and then back up. Remember, you need 3 to 5 closes below. And look at this big run-up that happened on Friday, all right? Once again, traders love to be victims, because they'd say like, well, Steve, I never would have known that this stock was going to gap up 5 points. Well, first of all, the market has been telling you since November that it wants to go higher. So yes, you did know that it was going up. You just didn't know how much it was going to go up. And if you wanted to apply some type of method or entry technique, you could have clicked on our short-term entry point, which is steps 1, click on signal arrows, and you think you could have taken advantage of all these buy setups. In fact, one that happened last week right here. Okay? These are all provided for you, all this education, everything is here on our new PTS Primo Charting Platform. Now, I know a lot of you say, well, Steve, I don't trade stocks. I trade the futures. Okay, let's look at the E-mini futures, okay? Let's look at the E-mini S&P now. It's going to automatically come as a daily chart. This is the way the daily charts look. This was our large sell-off. But let's go and look at something that happened on an hourly time frame, all right? Let's apply an hourly time frame. And looking back the last 2 days, Thursday and Friday, well, guess what? We've been consecutively above the buy-sell line. So even though the market looked a little shaky those last couple of days, you would have been a buyer. And if you applied one of our techniques here, which is steps 1, once again, look at all these buy signals you would have had. Now, this one would have not worked out, but you could have quickly made the money back, okay? This is on an hourly chart. All right, say, well, Steve, I don't trade that longer term. Okay, let's go to a 10-minute chart, okay? With our platform, you can just change the time frame, hit apply. And you think you could have done well using steps on our 10-minute platform. These are all automatically generated buy setups. This was from yesterday at 7 a.m. coming towards the end of the day, okay? Remember, we're not a predictive tool. We don't just furnish you signals to tell you what to buy or sell. You learn what this is all based off of, and right off the bat, you knew at 7 a.m. Pacific time that you were only going to be a buyer. And so steps was generating all these buy signals. All right, so that was on the E-mini futures. Let's look at an entirely different market. Let's say you trade currency pairs, all right? Here's the British pound on a daily time frame, okay? And once again, doesn't matter what market we're looking at, what time frame, the buy-sell line told us going back to November, we had consecutive closes above that we are now a buyer in the British pound. So I don't care what economic news you follow. I don't care what some FX trader says on some website or some $5,000 system. You're only going to be a buyer. It's that simple. And if you applied steps, or I should say strategy number 1, this is one of our strategies we have, one of our simple strategies for pullbacks. Well, look at all the buy signals that were generated right here in December, and then some more have been generated lately to go long, all right? Now you learn all of these rules. We're not a signal service. We don't not just want to apply these up and down arrows and tell you what to buy or sell. You're going to learn all this, what this is all entailed in the course, and then we provide these up and down arrows to check your work to make sure you're in line. But don't you think you would have liked to purchase the British pound somewhere down here with all these buy signals? How about right here? Even though it was going lower, it started to bounce, and guess what? We've had nothing for the last week but buy signals in the British pound. So it may be something you may be wanting to watch, okay? Let's go back to stocks, all right? Let's look at MAXR, another stock that was featured in Yahoo Finance, okay? Now this stock was doing well. Here's what we mean by consistency. Once again, strategy number one was generating buy signals. Well, guess what? These didn't work out very well. Once you got into the sell zone, you would have exited with a loss, but this is where we say stay with it because sell signals were generated, and don't you think you would have liked to take advantage of these signals to go short at 63 when the stock went down roughly about 10, 12 points? Okay, this is coming into Friday. This was actually yesterday, all right? And look at the other buy signals that were generated while you were in the blue zone, okay? These are all prominent strategies. These are all things that have happened recently in the market. Now, the last one I want to leave you with is, let me take this off here, strategy number one, is the spiders, okay? This is the ETF that represents the S&P 500 index, all right? Obviously, this entire time you would have known you were a buyer. Now, the buy-sell line is not designed to get you out at the top or get you in at the bottom. It's designed to tell you what the market wants to do in the overall trend. That's what it's designed to do. So, even though we had this large sell-off, right at this point, we started to get consecutive closes. So by this third day here, you would have known to be out of the market, and you would have bypassed. This is when the market was down 1,000 points, 1,100 points in one day. All that fear you would have missed. And now what do we have? We have a couple of closes above. We have 3 closes below, but now we have 1 more close above. Okay? So that's kind of telling us that, well, you know, the opposite, where we can't sustain being below for much longer. Let's see if we can get a good 3 to 5 closes above. And that way, maybe we're just going to be back in the blue zone again. At this point, it's still too early to tell. But we're having trouble staying below. Every time it looks as if we're going to roll over with 3 closes, we bounce back up. Now, is this telling us we're going higher? No, but one of our short-term entry techniques, steps, on Friday actually generated a little buy setup. Now, this is not a strategy. It's just an entry technique. If your strategy is calling for you to go long, well, guess what? It generated a buy entry on Friday, okay? Now, that's with steps. See all the signals that steps generated while we were going higher. The beauty of this is that it wasn't generating setups on the way up. Now, it generated a sell signal here. I don't think you would have wanted to take that because that was on a very large 1,100, 1,200 down point day. But you still, even if you've gone short that day, look at, you would have made a good almost 8 points to the downside before it reversed. Could have moved your stop to unchanged after that. Now that's just off one of our techniques, and I haven't even touched the service. We haven't talked about the PET D. We haven't talked about all of our other strategies we have here. I'm just showing you the simplest, most basic ones. Now that's steps 1. Now I know a lot of traders like to invest, so let's go to a higher time frame. We'll go to a weekly chart of the spiders, and now ask yourself, if you're an investor, even though we had that large sell-off a few weeks ago, were you selling into that? Absolutely not. Remember, you only sell if you are in the red zone. And we have never gone consistently closing below there. We've never even closed below the red zone. So on a longer time frame, on a weekly time frame, you're still long this market according to that the market is telling you. Now, the market can change anytime it wants to. It can, on Monday, have a 2,000 point down day. We'll just follow along with it then. That's the beauty of our methods, though. We always protect ourselves with stops so that we know, according to our capital, how much we're really willing to risk and lose. But had we been long this, let me show you another strategy. This is strategy number 1, one of our most basic pullback strategies. All the signal arrows that were generated. Here was one in October of 2016. And guess what? The last 2 weeks, 3 weeks, we have been generating buy signals on a weekly time frame. Now, are these generated to be 100% foolproof? No, they may not work out. They may be losses. But just to let you know, if you're an investor on a weekly time frame, strategy number 1 is generating buy signals, okay? There's no guarantee it's going to work out. Just telling you that this is what the market is telling us according to these proprietary rules right now. Okay, so we have all that information. We see how simple it is. And remember, let me show you our disclaimer. I just showed you a lot of performance results using the buy-sell line along with a couple of our proprietary tools, strategy 1 and steps number 1. But please remember that we can in no way guarantee that any of the results I just showed you will be repeated in the future. All the examples I showed you were strictly for educational purposes only. So before we conclude, remember, the market, not some guy in a chat room, not some guy on TV, not some $10,000 course you paid for, but the market is always telling you what it wants to do. Your only job as a trader is to listen to the market and then jump on board. That's it. Trading is really simple. It's just ourselves, the trader, who overcomplicates it, and that's why most traders fail. All right, so let's recap before we go to question and answer. Remember, excuse me, always apply the buy-sell line. Always have it on your charting platform, all right? I don't care if you use another charting platform. It makes no difference. You have access to a 50-period moving average. If you say, well, Steve, I only trade 5-minute bars. Great. Apply a 50-period moving average of 5-minute bars, all right? If you only trade weekly bars, apply a 50-period moving average of weekly bars. It's the same thing. You don't have to look at different time frames. But if price is above, you'll only look at the market from a buyer's point of view. If price is below, you'll only look from a seller's point of view. All right? Remember, we're looking at the 50-period simple moving average. You're free to experiment with other moving averages, but in my 4 decades of trading, the 50 works better than anything I've ever seen. But feel free, go experiment with a 20-period moving average, experiment with an exponential, experiment with weighted. It's up to you. But remember, this is not a system. We are not buying just because price closed 1 or 2 days above the 50. And we're not selling vice versa. This is just telling us the right side of the market to be on. But it's so powerful, as you've just seen through all these examples, of getting you on the right side, that it will help you to be a consistent trader. And then lastly, we share with you how simple this is on our new platform using our fluid feature. The fluid feature has 2 advantages. It not only tells you what side of the market to be on, it shows you the strength of that market by the slope of the buy-sell line. So, before you ask me questions, I want to ask you one. Do you think this edge could have helped your trading this past year? Remember, go back and look at your last 10 or 20 trades. I can almost guarantee that the reason you lost was because you were buying when you should have been selling, and vice versa. Well, we have great news for all of you today. Taking time out of your Saturday morning to attend today's presentation. We have a great discount for all of you today. We're going to offer you our new platform. This is the trading educational portal that teaches you how to listen to the market. 40 years of experience, 40 years of tips, tools, strategies, techniques that I've accumulated have been put into one educational platform. All right. Here's what's offered on our new PTS Primo charts that we're going to be offering all the attendees today. We're going to give you the enhanced buy-sell line. This comes with the fluid feature. It also comes with a background or the basic simple 50-period moving average. Okay, you're going to be able to have that on your screen just the way I showed you with those live charts a few minutes ago. You're also going to get steps. That's what we shared with you a few minutes ago, where there were buy signals generated along with the overall trend. That's our short-term entry points that are basically based off of fine-tuning your entries. Okay. We're also going to give you trading strategy number 1. Remember the buy signals that were generated with a lot of the stocks I showed you, especially in the British pound. You're going to get all the complete rules and know how to apply that on your charts. For example, remember we looked at BWLD, all right? Remember where we said how traders love to play the blame game? They say, well, I never get to take advantage of stuff like this. Well, once you have our platform now, you're going to be able to see that you could have been knowing that this was a stock to go long. Once you applied strategy number 1, you just click that on as I showed you a few minutes ago. You'll get the drop-down menu, click on signal arrows, and guess what? There was a buy signal generated a week before that news came out. Did we have any idea that the news was going to come out that they were going to get bought out? No, but the stock was telling us it wanted to go higher, and so we jumped on board by adding some structure that told us to get in right there at the very bottom. You have all that capability, what we're going to be sharing with you today, all right? Not only that, we're going to supply you with our scanner. This is a great way to scan for signals on a nightly basis. If you're not free to be in front of your computer during the day, during the week, well, don't worry. You can come home at night, use the scanner, and you'll know exactly where the signals are for the next day. Here's how simple it is. Strategy number 1, you would simply click on and go to the scan option. Click that on. A drop-down page appears. You click on load symbols. We provide you with symbol lists, anywhere from top ETFs to S&P or NASDAQ 100 or currency pairs. Whatever one you choose will come down in a matter of seconds, and then you just click scan, and it will automatically show you what the setups are for the next day. If you see a green horizontal bar, that's a buy signal for the next day. If you see a red, that's a sell signal for the next day. All you have to do is double click on that bar, and the chart will automatically appear, and the signals will appear as well. This is all included not only with the signal scanner. You're also going to get over 90 technical indicators. So if you like to tinker under the hood, experiment with other indicators, feel free to do so. Now, we realize there is a technical bias to our platform, and we don't want to dissuade anyone from trading any way they'd like. We just want them to learn how to listen to the market. And if that entails that you have to use fundamental news, well, then so be it. We offer free Bloomberg TV. We have a media page on our platform. All you have to do is click that on, and you automatically get another page, a drop down that shows you live Bloomberg TV. Any economic reports, any fundamental news, anything that's happening in the world is coming on live, and you can have that on another page while you're looking at charts as well. And then finally, we have personalized tech support. If for any time you're having trouble pulling up a chart using the media page, applying the scanner, we have a lot of videos, plus we have personalized tech support. Someone will contact you as soon as possible and resolve the issue. All right, now all this stuff is just amazing. I just showed you a tip of the iceberg, what you could use just a few minutes ago. This is the educational portal, remember, that teaches you how to listen to the market. It took me over 40 years to accumulate all of this, and you're going to be getting this all in a matter of seconds. Now, we're offering you 30 days for only $7. You're going to get all this information I just presented for only $7. Now, this is Saturday. Most of you like to go out to lunch with your family on a Saturday. I can guarantee you would spend more, just a few people going out to lunch today, even if it was a fast food restaurant, than you would spend on 30 days of information and education that I've accumulated for only $7. So this is an amazing offer. Here's how to take advantage of that. Contact my sister site, which is Pro Trader Strategies. Okay, they can answer any question you may have or sign you up. The best thing to do is to call them directly if you have questions concerning the platform at 310-598-6677. Now, that link you see at the very bottom is the one you would click on to take advantage of that $7 offer. And it's not live, so go to the chat box on the far right-hand corner. That's a live link. All right, that can take you there. All you have to do is click that on. It's in the chat box, and it will automatically take you to the sign-up page. This is a great, great offer. Please don't sit on this, because we offered this just the other day for over $350, the exact same thing. And now, just for the weekend attendees, we're dropping this down to $7. But after this concludes, it most likely will go up to that price again. So I'm going to leave all this information up here. I want to thank you for holding off on asking any questions. Let me open up the question and answer box right now. People are saying, Steve, is this a 50-period simple moving average or an exponential moving average? Well, remember, once again, you're free to experiment with whatever moving average you like, but it's been my experience. I've done all the hard work for you. Trust me, I've looked at every type of moving average there is, every time frame, and the 50 works the best in all markets. Okay, so I would just focus on that. Let's see, another question is, when a signal buy or sell arrow shows on the chart, when does the actual arrow get generated? At open or end of day close? That's a good question. The signal actually generated during the open. So in other words, if all the conditions are being met intraday, a green bar will appear. But remember, it goes entirely, let me say this again, it goes entirely against our philosophy for you to rely or depend on your trades based off of an up or down arrow. Those arrows are only provided there for you for educational purposes only. In other words, if you learn one of our strategies, you will know what it's based off of. And we offer those up and down arrows for you to check your work, similar to having an open book test. In other words, you want to learn the information, and then you have the open book there so you can check your work to see if you're right. It's the same way with this. We want you, through the online courses that we provide you with, to learn the strategies, to know what they're based on, to look for the patterns, to look for the indicators, and after a while, after you've checked them with the up and down green arrows, you never have to look at them anymore. I never look at the up and down green arrows because I've been trading all these long enough to know when a setup has appeared. I don't need to view them, and that's where we want to get our students to. So in the beginning, yes, we want you to look at them, but only for educational purposes as a means to check your work. But you should never, never, ever rely on just simply seeing an up and green arrow you need to know why that was generated, okay? And that's what we do. Remember, I stated in the very first opening sentence, we are an educational company. Our goal is not to force feed you signals just by looking at up and down arrows. Our goal is to teach you how to spot those setups and then let you make the decision. All right, you don't have to take trades if you don't want to. All right. In the courses, we give you different ways for entering. It's up to you how you want to enter, either on the bar open or the bar close. It makes no difference. Remember, you're in charge of your trading. This is not a system. So even though there is a rule-based format, you're free to pick and choose your entries, your exits, your stops to meet your needs. So we're always trained to follow rules and, okay, this is the way the system is, right? And this is the way everyone is trading it. No, you can trade it differently. So if you want to go along on the bar open, that's fine. If you want to go off the bar closed, that's fine. It's entirely up to you, okay? Alan is asking how much after 30 days. I believe the price, Alan, goes up to $97, but it'd probably be best to check with ProTrader Strategies. Even at that price, that's a tremendous discount. There are so many platforms that are hundreds of dollars a month. And this is all education that has taken me 40 years to accumulate. So even at $97 a month, that's still a fantastic deal, okay? How much does the buy-sell line cost? Well, there's no cost for that. You have access to that right now. I mean, you have access to the buy-sell line right now if you like, if you have a charting platform. If you don't have any platform, well, try it for $7. You'll get the buy-sell line along with everything, okay? So that I've talked about, that I've included in that offer. So try it for I should say, try it for a month for $7, and you'll see how well the buy-sell line works. Let's see, Alan asks, okay, yes, after 30 days. You're welcome, Alan. Remember, this is a great offer. We're trying to show you our sincerity in that we're trying to teach you. We're not trying to say, this is a great system we have. I've back tested it for 10 years, and it costs $5,000, and you're going to be retiring in the next 6 months, the way so many webinars do. We don't believe in that. Our only goal, our only mission is to provide you with sound fundamental education that stood the test of time, and then educate you so that you can make your own decisions. This is what we do in our online courses, and this is what the platform does. So I really sincerely hope you got something out of this. As you can see, our attention to detail and trying to educate you with the buy-sell line. Take advantage, please take advantage of that $7 deal, and then you can decide for yourself after 30 days if it's right for you. But I'm almost certain you'll be pleasantly surprised with all the information jam-packed, okay? In conclusion, I want to say thank you so much for taking time out of your Saturday morning, and I really look forward to all of you becoming students of mine, but more importantly, being members of our new PTS Primo Charting Platform. Thank you so much. Remember to contact ProTrader Strategies. Click on the link in the chat box, and I'll see you in class. Thank you so much. Bye-bye.